this one candle tells you something. It tells you what the next candle wants to do, if we want to go higher or lower. Now you will learn this in 5 steps, and by the end, you will be able to predict the next candle at all times and even profit from it. The concept in this video is called candle signs, and in candle signs you have 2 types of candles, because there are, generally speaking, 2 types of price action. Either we get fair value gaps towards one side of the market, so we simply have a trending market, either higher or lower. Now on one time frame that might look like fair value gaps going higher in this case, but if you go up in time frames now, that turns into one singular up candle. Now in candle signs, this up candle with a big body and small wicks is known as a disrespect candle. This means that we can continue in the direction of the disrespect. Now on the other hand, if the market is not trending, then there's most likely a reversal going on, where fair value gaps are first of all going higher and then going lower. Now when fair value gaps go higher first and then lower, this results in a long wick at the top. When fair value gaps first go lower and then higher, this results in a long wick at the bottom. These long wicks is then what we know as respect candles, where we can continue in a direction that we are respecting. Now just knowing this is not enough. You need to understand how and where to apply those 2 types of candles. We're going to dive into that in step number 3, the direction. But first, let's quickly go over step number 2, the PD race. At all times, it is important to understand that you want to combine candle signs with PD race, because price is always moving towards and from PD race. So the next target that we have in price is always going to be a PD ray. And the way we are going to deliver there is also always going to be a PD ray. Our main focus for this video is going to be on the following PD rays: fair value gaps, previous candle highs, previous candle lows, and swing points, so swing highs and swing lows. Combining these PD rays with candle signs will lead to something beautiful, and that is 2 candle rejection. Now we will dive deeper into this at step number 4. First, we need step number 3, the direction. Now in direction, our focus is simply based on answering one singular question, and that is, in the next candle, are we going higher or lower? So is it going to be an up candle or a down candle? Now then, the way we determine what that next candle wants to do is by first of all marking out all the PD rays. So here we start on the monthly time frame. I'm just going to mark out all the recent PD rays that we have. That fair value gap, we have this previous month's high, that previous month's low right there, we have this swing high as well, and we have this swing low. So we have determined the monthly PD rays. Now ask ourselves the question, where is price coming from? Well, price came into this monthly fair value gap right there, had a sting into it, then tried to deliver lower towards this previous month's low. After reaching this previous month's low right there, it continued higher overall, disrespecting the previous bearish fair value gap that we had right there and creating potentially a bullish fair value gap right there. So if we answer that question of where is price coming from, then where is price going? That question becomes quite clear, right? Because if it's not respecting those bearish fair value gaps and we are getting potentially bullish fair value gaps right there, we could argue that we are aiming for this previous month high right there and this swing high as our main target. So on the monthly, we had a very clear answer to the question, in the next candle, are we going higher or lower? Then the weekly and the daily, we want to align those with the monthly time frame. Now, is this always going to be the case, and are we going to exactly continue higher right there? No. But the probabilities, and trading is all about stacking up probabilities. So what is more likely to happen? It's more likely that we are going to continue higher right there. So there might be an 80% chance that we continue higher, a 20% chance that we continue lower. But nothing in trading is 100% given. Nothing. Now this brings us one step closer to entering and profiting from it. But before we go over entries, we need to go over step number 4, narrative. Remember those PD rays, because I mentioned price is always moving towards and from PD rays. Moving towards a PD ray is the direction. Moving from a PD ray is the narrative. So if we are going higher, then where are we going higher from? Now, if we stick to monthly, weekly, and daily, we see on the monthly right here that we don't have this fair value gap just yet, because that third candle is still in the making. It hasn't closed yet, so there's no confirmed fair value gap. Now, if we go into the weekly then to then find a fair value gap, we see that we had marked out this fair value gap earlier on right there. So this bullish fair value gap is what we can continue higher from towards the targets right there. This previous month's high and this swing high at the top right there. Now, what I want you to pay attention to is what do these fair value gaps have in common right here? This fair value gap right there and this fair value gap. They are both a part of something I call the ping pong effect. And the ping pong effect might sound very fancy, but it's really not. It's quite simple. It's understanding that fair value gaps get created at previous PD rays. So what I mean by that is if we establish right here that we have a bullish trend, as in we want to continue higher, then what we determined in the previous step, the direction, we had marked out all those PD rays. This leaves us with premium arrays right there, which are the bearish PD rays, so a bearish fair value gap, for example, and we have discount arrays, which are the bullish PD rays, so in this case, a bullish fair value gap. Now, if we want to continue higher, discount arrays will hold and push price higher. But in a bullish trend, and if we want to continue higher, what do those premium arrays actually do? Those premium arrays are the reason that we even create a retracement in the market, to retrace back into the discount array to then continue higher from it. So what we see right here is when we continue higher and we create an expansion right there, which creates the future fair value gap, this fair value gap gets created and the third candle stops a little bit, creates a rejection from the premium array towards the left. This fair value gap, but also a sweep of the previous candle high to trade back into the fair value gap to then continue higher from the discount array again. Now, how do we then know if this bullish fair value gap will actually hold and we will continue higher? And this, again, is where candle science comes in. So candle science comes into every single step of that process. Now, before you start seeing it everywhere, this is what we in the MMT call two candle rejection. Anytime we trade back into a PD ray, it has 2 times it can reject. Hence the name two candle rejection. It's either going to be the first candle or the second candle. And if it's not the first or the second candle, then most likely we are going to create a consolidation or we're going to see opposite prices. Now, this again is a checklist. To understand two candle rejection, first of all, determine the time frame of the PD ray. In this case, we are looking at a weekly fair value gap right there. Okay, you are going to be looking at a two candle rejection also on the weekly time frame. Then once we trade back into that weekly PD ray, if the first candle is a rejection, the second candle can follow through. For example, we might see right here, we trade back into this weekly fair value gap right there. The first candle, up until this moment, of course, I'm not sure what will happen afterwards. And by the time you might be seeing this video, the price action might be completely different as well. But up until this moment, we are creating this respect candle because we are respecting this weekly fair value gap right there. So we could expect from the next candle to continue higher right there as well, targeting those premium arrays. This right here is what that looks like. Here we have this daily fair value gap right there. We sting back into it. We respect it right there by wicking that fair value gap. And after the next candle, we can expect lower prices. Now, if the first candle does not reject, so we do not have a rejection, then we can still sweep the previous candle low in a bullish scenario to then continue higher, or previous candle high in a bearish scenario. So if we take a look at this fair value gap right here, then we see that this first candle, that down candle, is not necessarily a huge respect candle, did not continue higher immediately. Now, this is usually the case when price doesn't have the time to continue higher in that candle. So we trade back into this fair value gap quite late during this candle formation. That leads to quite a low close in that case. So what we can then focus on, because the first candle is not a rejection, then the second candle can sweep the previous candle low, use that as the PD ray to then continue higher from it. So if you're going to trade from it, you're going to be paying attention to this previous candle low until we reach the next premium arrays right there. And then you would be trading this expansion phase candle sitting right there. I'm going to give you one more example right here. It happens everywhere. That fair value gap right there, first candle, somewhat of a rejection, yes, but the second candle sweeps the previous candle high to continue lower. If the first candle is a rejection, the second candle can simply follow through. If the first candle is not a rejection, second candle can sweep the previous candle high, previous candle low, depending on the bullish or bearish scenario, to then reject. And if that doesn't happen, that tells you something, either opposite prices or a consolidation. Now, the next question is, how can we then capitalize on it? So how can we profit from it? Now, you can get creative with this. How you want to enter is almost up to you, because the hard work is already done on the higher time frame right there. The lower time frame is simply getting involved. Now, when you understand candle science, risk management wise, a whole new world opens up to you. Now, let's take a look at this expansion candle right there, how you could have gotten involved and your risk management. From this fair value gap, we might want to continue higher. The first candle is not a rejection, so we understand it could be a previous candle low sweep to then continue higher. So once we reach below that previous candle low right there, that's when you right here can go into the lower time frame to start looking for fair value gaps to continue higher from. Let's say we go into the 4-hour time frame right there. Then on the 4-hour, we can clearly see the sweep of the previous candle low right there to then the rejection, which again, on the weekly, it's one singular candle. Here on the 4-hour, it's fair value gaps. We see this fair value gap right there. Now we can repeat the cycle, right? Because you see the 2 candle rejection right here on the 4-hour. So if you want to go into the lower time frame, be my guest. Now for this example, let's say right here, we enter from this 4-hour fair value gap. We had our stop loss at this level right there, targeting overall a 1 to 2 RR. Now, when do we go break even at this moment in time? We go break even with one single statement, when there's no reason to return. And to understand that statement, you have to understand what price action wants to do. When price stings into a previous fair value gap, the objective of price to now go ahead and do is to create a new fair value gap from that previous fair value gap. So right here, when we tap into this 4-hour fair value gap right there, we sting into it, we have the respect candle. Now, price's objective is that we create a new 4-hour fair value gap from this previous 4-hour fair value gap. Meaning that once we have this respect candle, there's actually already no reason for price to return anymore, because now it should create this expansion candle right there, and then it should create the fair value gap to then continue higher right there. And that means, based on candle science, there's no reason to return anymore towards that level to then potentially continue higher. All right, perfect. Thank you.